What's going on, guys? My name is richardlmoglen and welcome to this week's Stock Market Outlook video. This is a series I post every single weekend to help you guys trade with the trend and stay up to date with the current market health. Right now, we are still in a correction, but there are some signs that they could be changing soon. Last week, we had positive price action from all the major indexes, and all of them closed in the top half of their trading range. And next week, we are eligible for a fall through day. So this is actually the most important time to be keeping your watch list up to date and taking special notes of any stocks that are outperforming the market. I'll actually be posting my fall through day watch list tomorrow, and I'll be going through the technicals and fundamentals of some great stocks and giving you guys specific buy points. So if you don't want to miss that, make sure you subscribe to the channel. And while you're at it, go ahead and click that like button below as well. I would really appreciate it. But now let's get into the video, and I want to start off today by looking at some weekly charts of the indexes because I think it's very important to provide context with the current situation. So looking first at the NASDAQ, you can see that we've been above this 200-week moving average since 2008-2009. And right now we almost touched it, but we are clear of it and still in that long-term uptrend. And as I said, we closed nicely near the top of the trading range. And overall, this is the strongest of the indexes right now, with the current close well above the lows of 2018. Now, switching over to the SPY or the S&P 500 ETF, you can see that we're actually below that key long-term moving average that we bounced off in 2016 and 2012. So in order for me to get aggressive, I really want to see the overall market move above this 200-week moving average. But we did have, once again, a strong last week with the close near the high of the trading range and above average volume as well, although lower than the previous down weeks. And if we do get that fall through day, I do want to wait to be aggressive until the short-term moving averages, like the 10-day moving average, turn up. And I also want to see increased volume coming in and have a positive up week with volume greater than these down weeks. And as you can see, the SPY is above the lows of 2018, but it just got there. And taking a look now at the DIA or the Dow Jones Industrial Average ETF, you can see we're also below that 200-week moving average, and we're not quite at the lows of 2018. But once again, we did have a positive close to the week, and you actually had greater than average volume coming in, probably due to all the shares of Boeing being traded last week. And finally, taking a look at the Russell 2000 index, you can see that we had that same pattern with a strong close, but we are currently even with the kind of 2014, 2016 price levels. So this is the weakest chart out there, and we're not quite close to even that 2018 lows that we set. And the 200-week is actually in danger of almost flattening out and potentially moving down. So once again, to be aggressive, I would like to see the mid-cap supporting the overall move of the indexes. And before we move on, one last thing about the Qs. You can see that this was a rare outside week during a bear market, and that doesn't happen very often, and it usually signifies a change in momentum. So is that true? Could this rally have some good footing? We shall see. But now I want to take it kind of day by day on the Qs and analyze each day individually. So first, on this Monday, you had kind of a continuation of the prior Friday's action. And we actually took out the lows of the previous rally, which reset that counter. But we actually finished and closed constructively almost at the open. So overall, a negative Monday, but a strong close in that negative. And on Tuesday, you can see we had a very good day, a big gap up, and then a finish right at that high of the day, and a green dot as well on the QQQ on that day. On Wednesday, we had a down day overall, but once again, the price action on Tuesday and Wednesday felt normal. It didn't feel like that huge volatility that we'd been experiencing the prior weeks, where we were up 10%, down 10%. Everything felt a little bit more normal and more contained. And then on Thursday, we had a very good day, a gap up, and it barely even went below the open, and we finished right near the high of the day. So that was about as good a day as you can get, and overall we were up 5% on that day. And then on this Friday, we had an inside day with all the price action contained within Thursday's price action. But overall, we finished down on the day because of a really bad last 30 minutes. And let's actually take a look at the hourly. And you can see that we were doing pretty normal here. Everything seemed like it wasn't that volatile. And then in that last hour, you can see all that selling coming in with above average volume as well. So I wouldn't be surprised to see kind of a down Monday as well as a continuation of that selling pressure. So that is the price action day by day. And I think it's important to note that on Monday, it was a change in momentum, and that was carried forth for 3 straight days. So overall, a good kind of start of the week, but we'll see what happens on Monday. I think it would be constructive to have a down day, but hopefully it doesn't take out kind of the previous lows and will keep this rally alive. But overall, I'll be waiting for that fall through day, which if you're not familiar with what that is, it's basically a close above 1% and on more volume than the previous day's session. So that's kind of the go signal that I'm waiting for. And I'll talk about that a little bit more in tomorrow's video. So now that we've gone kind of day by day on that index, I do want to do a quick checkup of gold. And you can see that we gapped up in a big way on Tuesday and then kind of went flat. But overall, gold is recovering as well, which is good to see. And it bounced nicely off this 200-day moving average. And then I also want to check in on the FFTY, which is the Innovator IBD 50 ETF, which kind of gives you some perspective on how growth stocks are performing. And you can see that it pretty much mirrors what the QQQ did. And overall, on Friday, we were down about 3% after a gain of almost 5%. And overall for the week, it looks like you were up 11.1%. So you can see that growth stocks did pretty well last week. And this is reflected over here. You've got my fundamental top 400, the most recent one. And you can see that I've sorted this by weekly change. And a lot of big growth stocks with good fundamentals were up 20, 30, almost 40% from the open of the week to the close. And that's constructive. You want to see those stocks moving up that right-hand side and finish building those bases. And right now, I think we're in week 6 or 7 of this correction. About week 6. And so we're about the time where bases can be finalized. And hopefully, if we get that fall through day, we see some stocks, some leaders breaking through from those bases. So that's kind of what I want to see. But now that we've talked about the price action, let's go ahead and talk about the IBD Big Picture. And actually, before we get to that, I do want to talk about the VIX. I mentioned that volatility was slightly down, and you can see that we're down from the highs of the previous weeks, but we're still up there. And as I noted in previous videos, it can stay up there for quite a while during these corrections. And we did drop all the way down to almost 35, it looks like, but we're right back up at that 65 level. So one more thing that I'm looking for to really get aggressive as well as those short-term moving averages moving up is I want to see the volatility drop and this VIX to really drop down. It's just so much easier to take up positions when the intraday swings aren't more than 2%. It just makes things easier. Your stops get hit less. So that's one thing that I want to mention. And now let's talk about the IBD Big Picture. So overall in this big picture, you can see that the title is Stocks Sink Late, but Score Big Wins for the Week, and breaking down a possible bottom. So as I mentioned previously, we had a bad end to the close Friday, but overall stocks were only down about 4% on the NASDAQ and 3.4% on the S&P 500. And this was after the House and the Senate passed the $2 trillion economic rescue package. So there wasn't really any clear indication why that selling occurred. There doesn't really have to be. That's why it's so important to study that price action and use it as an indication of what investors are doing at that time. You can also see how they talk about how the rate of infection is not slowing down. And I'll also in the description kind of post a video that I found super helpful with regards to the situation. And it's basically Bill Gates on CNN talking about how He's helping build vaccines for the future and also how we should deal with this current crisis. So if you're interested in that, I highly recommend that. It's about 10 minutes long and definitely taught me a few things. But overall, you can see that we had a nice bounce in all the indexes, and they reiterate that you need to wait for that fall through day, and you should be focusing on high quality stocks and kind of lower your position size at first. There's always room to kind of add on to positions as the stock indexes keep moving up, but at first you should go in and scale in slowly. They also mentioned how history is not on the side of the first fall through day, and that's another reason to kind of scale in as opposed to going 100% in, and especially after a big quick drop like we've had, it's very hard for stocks to recover sharply and have a V-shaped recovery. It's more likely to oscillate back and forth, build support, build those bases before stocks are ready to move off the lows. So I also mentioned this. It's been 6 weeks since the market peaked, which is long enough to build those bases. And then they mention a few key stocks down here. Boeing was up a crazy amount last week, but fell on Friday. They talk about QDEL, Teladoc, and CAG. And that's pretty much it from the IBD Big Picture article. Their current outlook is still a market in correction, and you've got a couple leaders up in volume and leaders down in volume here. So now let's take a look at the wishingwealthblog.com, and you can see the GMI is still red, and as of Thursday, we are still a 0 out of 6. And you can see the clear GMMA chart here that still shows that downtrend. So overall, we are still in a correction, but we're on the cusp of a potential rally and a fall through day. So as I said, it's very important to have an active list of potential investments, and hopefully my video tomorrow helps you guys out with that. But that's pretty much it for me. Thanks so much for watching. Make sure to leave a like down below and comment down below if you have any questions or concerns. But thanks so much for watching, and I'll see you guys in future videos.